Amit, I guess the call here is that the disappointing iPhone sales in the December quarter are not gone forever, and that we're going to see evidence they're coming back.
Yeah, absolutely right. I think the December quarter miss, if you may, is somewhat embedded in folks' expectations already. Again, the call would be this is more a production issue rather than a demand issue. And pick the number you have, 6 to 8 million iPhone units that did not get shipped in time for December, which will result in a miss. We would argue that's the deferral of demand, not a destruction of demand. So our take is, listen, December quarter will be print will be bad, but March guide is going to be much better because I think those units will catch up into the March quarter. So forward estimates, if you may, are going to go higher, not lower. And if that happens, we think the stock keeps working higher from here.
Now, I guess the bigger question, in addition to the pace of iPhone sales, has been just exactly what we should be paying for Apple, for as steady as it is, as high quality as it is in terms of the balance sheet and shareholder return of capital, all the rest of it. Are we paying 20 times earnings? Is that a routine level as we might be looking at a little bit of a global slowdown?
No, it's a great question. What I would say is I think Apple is a whole lot closer to a consumer staple company versus a tech company. So if you look at the way most folks use their Apple products, it is a lot like a consumer staple than a tech company, right? Its utilization is fairly high. If that's the case, and you look at traditional consumer staple assets, they do tend to trade in the low 20 kind of PE range, 22, 23, 24 times. I would argue all day long that's the fair way to look at Apple, and that's perhaps the right way to value Apple as you go forward.
We have seen some reports about some details on a new Mac model, things like that. Is that part of the business material to, the immediate outlook?
Macs, iPads, Macs, especially about 4 or 5% of revenues, have certainly been a pretty good growth driver for them through the pandemic. So it is interesting on that basis, but the reality is, I would argue all day long, which is as go iPhone, so goes Apple stocks. I think that is still the number one KPI for investors to look at in terms of what happens to Apple.
Sure. And, is it the time in the product launch cycle for Apple to actually start doing okay? I'm trying to remember, the cadence of once we've had a launch of a new iPhone, what tends to happen in the following year? Or are we beyond those patterns now because it has been smoothed out so much?
My hope and expectation is it's been smoothed out so much that these, TikTok cycles that you got from Apple traditionally, right? The number was good, the S was not so good, have smoothed it out as you go forward, right? And also I think with iPhone, the production issues have essentially pushed out some of the channel fill dynamics by a quarter or two, right? So the big thing I would argue, you look for Apple beyond iPhones as you think about 23. One is gross margins. To a large degree, I would argue all the semiconductor pain that you're seeing from a memory pricing, from a supply perspective, has to be a gain for someone. I think Apple is going to be one of the big beneficiaries from better gross margins as supply chains normalize. And the second one is actually new product launches. This is the year, we've talked about this for a couple of years, you should get the new AR, VR headsets out of Apple. And, there tends to be a lot of positivity around new product launches when it comes to Apple.
Yes, there are. And also a long history of people thinking that new products were going to be kind of irrelevant. And then, like AirPods, they become kind of a big business at some point down the road. So we'll see how that goes. Amit, thank you very much. Appreciate it.
Thank you.